For this session, we now talk about investment property past 40. So if you still remember, under your property, plant, and equipment, we have several ways on how we recognize them. We can recognize them under past 16 if it is under property, plant, and equipment. So past 16 if it's property, plant, and equipment. We can also place it under past 2 if we can consider it as an inventory. We can also consider that particular property if ever it is for extraction of mineral resources under PFRS 6. We can also account for it under agriculture for past 41 if we have that particular property used for agriculture, your barter plant, if you still remember, some items can be considered PPE and some can be considered as part of your agriculture. Also, we have also PFRS 5 if you are holding that property for distribution to others. Now we have another accounting for a property, we call it your investment property. So what we need to learn here is when do we say it is considered as investment property and how do we account for an investment property? To start, so when is there an investment property? There is considered an investment property if in case, sorry, we can consider that there is an investment property, guys, if there is a land and building or land or building that we can consider as investment. So, investment property applies only to land or building. So, under past 40, investment property, it is defined as a land or a building or both held by the owner or by the lessee under a finance lease to earn rentals or for capital appreciation or both. So what is important in your investment property is we determine the control. So who controls in an investment property? So we said based on the definition that it is the owner or the lessee in a finance lease. You already know what is a finance lease because we have finished that already. So if you control it either by the owner or a lessee, what type of property can only be considered as investment property? It can be land, it can be building, it can be part of a building, or it can be both land and building. Okay? Who exercises control, owner or lessee in a finance lease, what type of property, land, building, or part of the building, or both land and building. And what is the purpose? That's why it's called investment property. The purpose is to earn rentals or for capital appreciation. So, for example, if you are the owner of the land and you rent it to others, okay, what do you consider here? The land, which is an investment property because you are the owner of the land to earn rentals, and the rent, which is considered a lease. Okay? So what's important here is how do we account for the land and building? Is it under past 16? Is it under past 2? Or is it under past 40? Which is investment property. So when can we say it is under investment property? You look into the control. Is it the owner or a lessee in a finance list? You look at the type of property, only two, land or building. It cannot be machinery. It cannot be equipment. It can only be land, part of the building, or both land and building. What is the purpose? To earn rentals. When we talk about these rentals here, the rental should be in an operating lease. So if you lease your property under operating lease, valid. But if you lease it under finance lease, not considered as investment property. Okay? you must only list it under finance. You must list it under operating list, not under finance list. So you just need to look at these items. Who exercises control? Two only. Owner, lessee, finances. What type of property? Land, building, part of building, or both land and building. It cannot be machinery, it cannot be equipment. What is the purpose? That is to earn rentals or for capital appreciation. So in our example, you are an owner of the land, you rent it to others. So how do you treat the land? The land is considered investment property, and of course, the rental to others is considered a lease. You are an owner of machinery, you rent it to others. What is the treatment of the machinery? PPE. Clear? You are an owner of a building, you rent it to others. What is the treatment of the building? Investment property. Okay? So ingat kayo dito, kailangan lang land or building at kailangan yung nagpapaupa or nagbibigay ng capital appreciation is the owner or the lessee in a finance list. If it's not the owner or it's not the lessee in a finance list, therefore it is not considered as investment property. Now we have your investment property partial own use. What is this investment property partial own use? So remember, you can only have investment property as land or a building. So when we say partial own use, that is if the owner uses part of the property for its own use and part to earn rentals or for capital appreciation. So for example, this is the land. Okay. So let's say this portion is used by the owner and this portion is rented to others. Okay. So if that is the scenario wherein one is used and one is rented to other, what you need to look at is whether it can be sold or leased out separately or cannot be sold or leased out separately. So for example, etong buong lupa na to, hindi mo pwedeng hati-hatiin na sabing, ito sa'yo to, ito sa akin yan. Ibig sabihin, it is not really under a boundary. So you cannot say the boundary of what can be rented and what is not because you cannot set up the proper area that is for that particular person or not. So you need to look whether it can be separated really or it cannot be separately or it cannot be separated. So it can be or it cannot be. So if it can be separately, you account it separately. So if the own use, so in our example, the own use is considered PPE and for release or capital appreciation, investment property. But what if it cannot be sold or leased out separately? So in short, you cannot define the area that can be leased out. You cannot say that from portions A, this, you will rent it. If you cannot say that, the look into the significant portion. Okay. So, ayan. Diba? Yan yung example natin. Ito yung own use, ito yung lease out. But you cannot list it out separately. Why? Because you cannot separate these two items. Okay? It is considered as a whole. So since it is this way, how do we treat it? You treat it based on what is the significant portion. So based on this example, what is the significant portion? Looking into it, the significant portion is lease. So if the significant portion is the lease, it is investment property. But if the significant portion is the own use, it is property, plant, and equipment. Okay? So investment property, partial own use, portion of it is used by the owner, portion is leased out or for capital appreciation. So if you can separate both, then you account separately. But if you cannot separate both, test the significant portion. Is the significant portion own use, then it's PPE. If the significant portion is the lease or the capital appreciation, then it is considered investment property. Next, ancillary services. So what is an ancillary services? So these are other services aside from renting out or for capital appreciation. So for example, you will rent your building to that tenant, and aside from renting it out, you will also, let's say, aside from renting it out, you will also deliver cleaning services on that portion of the building. So there is an ancillary services. So when we say ancillary services, you provide other services aside from the rent. So if there is ancillary services, you should classify that. If the ancillary services is significant or more significant, or the ancillary services is insignificant. So here it is considered bundled, okay? So you have your rent plus your ancillary services. So you look into the portion which is again significant. Is it the ancillary services or the rent? If the ancillary services is significant, it is PPE. But if the rent is significant, and the ancillary services is insignificant. So here the rent is significant, ancillary services is insignificant, investment property. Ancillary services is significant, meaning the rent is insignificant, PPE. Okay? So here you test which is more significant. Is it the rent or the list or is it the ancillary services? So how do we measure your investment property? So initially, cost plus transaction cost, just like a property, plant, and equipment. Subsequently, cost model or fair value model, like a property, plant, and equipment. So it's the same with the property, plant, and equipment under investment property, but a separate line item. You just need to know when is it considered an investment property. Take note, what can only be considered investment property? Land or building. Last topic for investment property. This is transfers to or from investment property. So in short, that is either investment property to past 16 or to past 2, which is inventory, or from PPE or inventory going to investment property. This transfers to or from investment property. So as you can see, from investment property to PPE. Ito naman yung una. This is number one. Next, from PPE to investment property. Let's change the color so that you can see. From PPE to investment property. Next, from inventory to investment property. Let's change again the color. Inventory to investment property. It's number three. Investment property to completed investment property, or investment property to another PPE. Okay, so these are just transfers from the different items. So either past 16 to past 40, past 2 to past 40, or past 40 to past 16. So you need to look at this item. So what can only be done? Investment property to past 16 to investment property, inventory to investment property. No investment property to past 2. Bawal to. Walang rule na investment property going to inventory. Wala ba? Meron. That is under number one. Ayan. Investment property to PPE or inventory. Okay? So, pwede lahat yung combinations na yan. Pwede yung past 16, past 2 to inventory to investment property, or PPE inventory to investment property. And you just need to properly account for those. You just need to know the treatment. I don't think that you will be asked on what are the treatment on this transfers. What I think we will be asked here is, if that particular property is investment property, what are the requisites for investment property? When can we say it is an investment property or not an investment property? So basically, your focus here is when do we consider it as investment property? For transfers to or from investment property, you are given your module. You can read that particular treatment. But what I want to emphasize here, you can transfer from past 16, past 2 to investment property, or from investment property to past 16 or past. So there is no prohibition as to the transfer from one item to another item. Okay? So what are the transfers only? Past 16, past 2 to past 40, past 40 to past 16, or past 2. That's it for investment property.